Hey there, class. Welcome to another segment from Phil, the Mortgage Professor. And today our topic is all about misconception. What do you mean by misconception? Are you talking about those false positive pregnancy tests? Well, in a sense, there is an analogy for that, because just like someone thinks they're pregnant, takes a test and says, yeah, it looks like it, but it's a false positive. Well, what do we mean by that within the mortgage industry? Well, a lot of people buying their first home are told that you have to have mortgage insurance, mortgage default insurance, commonly provided by Canada Mortgage and Housing, Genworth Insurance, or AIG Insurance. Now, that particular insurance you are going to be paying for if you need the insurance, typically when you don't have 20% down or greater. Sometimes even with more than 20%, you will need default insurance, but that's a different story. Let's just talk about you having perhaps 5% down, you're getting default insurance. Now, what I overheard the other day, someone was saying, oh, I'm so glad I got this insurance, because if I ever run into a situation where I'm not able to make my mortgage payments, I am protected. Wrong! All that insurance does is, when the financial institution, because you have not been able to or are unwilling to make your mortgage payments, they have to go through courts, go through a process, take your house away, sell your house, and typically if you have 5% down, they're going to incur a loss. The default insurance, the mortgage insurance the lender is talking about that you absolutely have to have, is for their protection, not yours. Now, in order to have something that actually protects you, why would you not make a mortgage payment? Well, one of the issues could be that you could become injured, or you may become sick. And if that is the case, and your income reduces, even though you may have some protection at work, typically that protection only covers about 67, at most 80% of your income. But if you think right now that if your income goes down to 80% of what you currently have, making that mortgage payment is going to be very difficult. But you can get an insurance that in the event of your sickness, in the event of your injury, that for a time period, those mortgage payments will be made. And quite often, if it's a creditor insurance, those mortgage payments don't affect any workman compensation or EI claims. So, in effect, you're on an even path, even though you are sick, injured, not generating the kind of income that you had before. So, do not think of mortgage default insurance, mortgage insurance commonly required by the banks for you to get your mortgage, as any protection for you. Find your own protection. Don't have any worries about that false positive, that misconception, until you're ready to conceive. Thank you.